Bloomberg Audio Studios. Podcasts, radio, news.
You're listening to Bloomberg Businessweek with Massar and Tim Stenovec on Bloomberg Radio.
And a name that's certainly come up on our radar is AMD. Stock was down about 3% at its lows today, now down about 1.3%. Bloomberg reporting that U.S. officials have told the company that the artificial intelligence chip that it tailored for the Chinese market too powerful to sell without a license. So ensnaring another American semiconductor company, again, perhaps, in Washington's crackdown on exports of advanced technologies, Tim.
Hey, for more, we turn to John Vinh, Managing Director and Equity Research Analyst at KeyBanc Capital Markets. John joining us from San Francisco, where he's at the KeyBanc Capital Markets Emerging Tech Summit. John, before we get to the specifics of AMD, which is certainly one of the companies you cover, I do want to get your thoughts on this market sell-off, especially on the tech side. How are you interpreting the weakness that we're seeing today?
Yeah, I think there's a number of different factors that are coming into play. Obviously, the geopolitical tensions with the China restrictions on AMD and MI300X. Obviously, AI has been one of the kind of leading drivers of the semiconductor industry. You also have another, reports out that iPhone sales are down over 20% in the China market, and obviously that's been a big driver of semiconductor spend out there as well. So there's just a lot of headlines out there that are just kind of impacting the semiconductor market at this point.
Is there any of it, though? Okay, so semiconductor. But I mean, in overall, the tech trade here, do you think the markets, considering the run-up that we've seen, certainly if you look at the NASDAQ 100 this year, it makes sense to see somewhat of a pullback here, or a little bit of a kind of maybe revaluation in terms of the run-up that we've had?
Sure, absolutely. I think what we're just seeing here is just a little bit of pullback, just given how strong the overall tech markets have been, and obviously, semiconductors have been a big part of that. So it does make sense that just given the headlines and some of the concerns that we're seeing today, it does make sense that we're seeing a little bit of a pullback.
Let's remind everybody, the SOX is up 16% this year, so quite a run up.
So, I mean, John, is it healthy to see a day like today, or does it concern you?
I'm not overly concerned. Obviously, it shouldn't be a surprise that, iPhones are kind of not doing as well in the China market, right?
We've been talking about it for months.
It's been weak, and obviously we know Huawei's kind of back into the market, and obviously we've been seeing signs over the last several months that they've been gaining share at the expense of Apple, and on the AMD front, that shouldn't be a surprise either. I'm not really overly concerned about it. If you think about AMD's positioning there, they're coming from zero share in the AI market, and most of their share and revenues that we expect this year are expected to be really non-Chinese driven. It's really going to be driven by all the major hyperscalers that are more North American based, and less. We see them less dependent upon the China market, at least in this early part of this AI cycle for them. Yeah,
and if I look at the SOX today, while it looks like every name, all of the 30 names in the Philadelphia Semiconductor Index are down today, John. NVIDIA is doing the best, just down about 0.4%. AMD is the third best, but it's still down about 1.6%. So definitely outperforming what we're seeing more broadly. Let's go to NVIDIA, right? Best performing name in the S&P 500 last year. Best performing name in the S&P 500 again this year. What are your expectations realistically that this one will continue to outperform, and fundamentally it has the reasons why?
Yeah, we absolutely still believe that NVIDIA is well positioned to outperform the semi market. Right now, obviously they are the clear major beneficiary of the investment we're seeing in generative AI. We're here at the Emerging Tech Summit conference, and one of the trends that's very clear here is that AI is being embedded into literally every application and end devices out there, right? It all started in the data center with the training of these large language models. And over time, obviously, that's going to move to inferencing, but you're seeing significant investment in software. And then you're also seeing significant investments in kind of pushing AI to the edge. I think the next product cycle that we can probably look forward to over the next several years is potentially, edge AI, which includes, potentially the proliferation of AI PCs, as well as, AI smartphones.
Hey, John, you got an $1,100 price target on NVIDIA, so significant upside from here where it's trading at $847 right now. One question that I've been grappling with over the last few months is really understanding the benefits of AI to a general company. We understand the beneficiaries as, Supermicro Computer, NVIDIA, AMD, but give me an idea about how the mom and pop company that can go out and buy one of these NVIDIA chips will benefit from using AI. How will it get people to buy more stuff? How will it get ads to be more efficient? How will it get fewer people to do more?
Yeah, I think a lot of those questions are still kind of very early days. Obviously, ChatGPT and OpenAI has given us a flavor of it. Some of the applications that we see, obviously, still very early days that are poised to improve significant efficiencies of small, medium-sized businesses are going to be, potentially Copilot, right? Copilot is embedded into Office. That's just going to make it more efficient for your average user to prepare presentations, right? To make a more efficient sales pitch. And then also, again, I talked about these edge AI devices and endpoints such as AI smartphones. I think one application that we potentially see and have heard about it, and Qualcomm, one of my other covered companies, has talked about, is like real-time translation, right? So today you can use Google Translate, but there's a latency issue, right? So if you enter in a phrase, it has to go to the cloud and then it comes back. But if you have a smaller size, large language model that it's embedded into your smartphones that is capable of supporting real-time translation, right? I mean, those are some applications that we look for that could make things a lot more efficient.
Yeah, that would be really useful.
Cool.
Hey, John, promise that we can check in with you after the conference and either come on by our studio or we'll hook you up remotely, because I'd love to talk more about what you're hearing and making the connection between kind of all the stuff that's out there, especially in the AI space and the semiconductor space, and how we kind of ultimately put it all to work. So thanks so much for taking time for us. Of course, John Vinh, he's Managing Director, Equity Research Analyst over at KeyBanc Capital Markets, joining us from San Francisco, where he's at the KeyBanc Capital Markets Emerging Tech Summit.
We got Andrew Collins with us. He's president and CEO of Sentient Jet, also the co-CEO of the parent company FlexJet. Good to have you back with us, Andrew. How are you?
Good to be back. Thank you. I'm doing great. Thank
Good.
you so much.
So did you see any of that weakness in 2023 that Dassault referred to in their earnings report?
It's funny because we deal with a lot of OEMs at the FlexJet level, and we have a fleet of about 300 aircraft there.
Original equipment manufacturers. For
original
those who
equipment
don't know.
manufacturers. Sorry,
most people know, but
Embraer, Gulfstream, people like that, right?
Thank you.
So at the end of the day, actually, they had back orders, and we had delays in getting aircraft and things like that. So. I don't want to call Dassault kind of an anomaly, but at the end of the day, we could fill that capacity and we could take those aircraft on, and we continue to take aircraft on.
But what about demand? Was demand in 2023 higher or lower than 2022?
It depends on what you're looking at in the facet of the industry. So if you look at it from a fractional ownership standpoint, there was a lot of selling that happened and a lot of pent-up hours that happened. So we just had the most flying we've ever had in company history over President's Day weekend, right? If you look at it from a jet card standpoint, which is Sentient Jet, we did see it kind of start to soften, and in the on-demand market, it's really getting back to kind of it's still growth over 2019, and you're still seeing some of the people retained from the pandemic, but it isn't like 21 and 22 where I think everybody was running around with their hair on
Dig
fire.
into that demand over President's Day holiday. Were there deals? Like, I don't know how you guys do it in the industry. So what was it all about?
No, it's I'll tell you what, in 21 and 22, it was long hours, long days, and every day felt like what we call a peak day. It just felt like everybody wanted to fly persistently. It used to be that like a Monday or a Tuesday or, you get a break. There was not a lot of breaks. Now what's happening is you're having high concentration days. And so in the fractional world, where somebody buys for a 5-year time horizon into an aircraft, they've bought the hours, they're going to use that. So the owner demand for that spikes on certain days. And so collectively, we've got the most hours under management we've ever had as a company, and it unlocked on President's Day weekend.
How much is in inventory, those hours? Like, I'm always curious, like, do you guys look at that of like, okay, this is stuff that people have paid for, have to spend and use?
Yeah, no, it's actually one of the major KPIs in our business. It's called hours under management. And you have to look at it by product, by aircraft, and you have to think about it. And that's how you do your demand shaping, how you think about capacity planning and everything else.
How much visibility does it give you right now?
It gives me very good visibility. Like the forward looks really good.
12 months?
Still good.
24 months?
Depends on how our year goes from a selling standpoint.
Interesting.
Yeah.
Okay.
Pilots, having trouble getting pilots?
No, I think the challenge for us, so we probably hired 400 pilots at the FlexJet level in 23. We'll do the same this year. I think what you have to think about is, number one, we actually try to hire the best of the best pilots. We don't look for just any pilot, right?
So where are they coming from? Are they coming from regional carriers, or are they retiring from?
No, they could be coming from a competitor. They
Okay.
could be coming from a regional carrier.
Okay.
They could be coming out of the military. Okay. But what we found is you want to make sure that if you're hiring somebody, you're hiring on a track where they're going to stay through 3 years. They stay through 3 years, they're in for a career. We want it to be a career destination. We do find that, excuse me, we're actually competing more with commercial airlines than we are any other competitor, because the commercial airlines are really putting out large sums of money and large cash.
And they're unionized too,
And they're unionized. But what people forget is the history of commercial, right? Where there's furloughs and things happen, and so and so it looks very rosy right now. I think we've got a pretty methodical plan and a pretty good destination for you as a career type. So yeah, we've put a lot of money into recruiting our pilots.
Who's an ideal pilot in terms of age and hours that they've already got?
So you want somebody that's got the time and type. You want somebody that's experienced. You want somebody that has at least a minimum of 3,000 hours. You know, he really has we actually increased it recently as opposed to decrease it. Most people are decreasing it.
That's why I wanted to ask you.
100%. Yeah. And that's actually a good bellwether for us. That just shows you the strength of who we are. We're trying not to fall into the trap of, recruit at all costs. We're trying to get the best of the best.
Can you remind us on pricing?
Sure.
Give us an idea of if somebody wants to take a trip, and have you upped it in the last 12 months?
If you have to ask, you can't afford it.
Sound like my mother.
So I let me speak to it at the card level, because that's where I had a lot of experience. At the end of the day, during the surge, when everybody wanted it, the market would bear anything, right?
Yeah.
And for us, we had to keep up with the market and keep pace and make sure we were living up to the consumer promise. So we had to augment pricing.
Okay.
So we augmented pricing probably by 35%. It's the biggest jump I've ever seen, and we've kept it there. And the market is bearing it. It's our sell-through is probably about 10 to 15% less than what we were doing, but we're very happy with the clients we bring in.
Got it.
Yeah.
Hey, I want to talk sustainability a little bit, because sustainable is not something you think of when you think about private air travel.
And I'm going to tell you, we're going to get a million emails of people you're talking private jet, sustainability,
Yeah.
Come on.
You're burning dead dinosaurs.
Come
here.
on.
I'm happy to do it. It's one of my favorite topics.
Are you following Elon's jet or Taylor's jet?
Yeah, I know all about it.
No, seriously. So
How do you think about it? I mean, you guys hit a milestone recently, but it's carbon offsets, right?
No, it's more than carbon offsets. You want to do full emissions. So this is the big mistake that people make in our industry, and we're trying to actually lead the pack. So we do 300% offsetting, and it's built into the pricing. It is no cost to the consumer. This is a choice we made 3.5 years ago, and even during the time when we had to pay operators lots of money during the surge and really think about things, we never wavered on this. This is really important to us. You do a full emissions offset. It's not just doing carbon, a carbon offset. You're getting water vapors, aerosols, every imprint that you possibly can, you're factoring that in. And we work with a partner who's gone through and certified a lot of different projects to help us with this, plus registering our offsets and everything else. So it's really important to us. We've probably offset about 1.3, 1.4 million metric tons of carbon dioxide at this point, and we're going to keep going, and we've got millions earmarked for it. We need to get to a world of sustainable aviation fuel, and we need to get this electric kind of world to happen, and it's going to happen further out than we hoped.
10 seconds. How quickly can we get there?
7 years.
7 years?
Yeah, it used to be 5. Everybody would say 5. I think mass consumer, mass passenger. You'll see some hybrids, but I think it's about 5 to 7 years minimum.
Ooh,
Great stuff as always. Come back soon.
Absolutely, anytime.
Andrew Collins, President and CEO of Sentient Jet and co-CEO of the parent company FlexJet, joining us here in studio.